I welcome you once again, session number 10 and 11. Today we are combining two sessions, which I have learned from yesterday. 4 sessions we had to combine. So we learn by experience. Cell redevelopment, PMC, feasibility report, development control and promotion regulations. They are all interconnected. Because they are interconnected, we have shared the notes with you. So we have with us today Tarun Bhai Mota, and next to him we have an architect Manoj Daisaria. Architect Manoj Daisaria is the past president of practicing engineers, architects, town planners Association of India. Have you heard about word PIETA? PIETA means Practicing Engineers, Architect, Town Planners Association of India. Manoj Daisaria was the past president, and of course we had invited the present president also. The name is same, Manoj Dubal, but because his daughter's marriage is nearing and therefore he is not able to make it, but he has sent his entire team, entire executive committees, the office bearers are going to be with us today. He is an architect. He has maybe more than 500 developers, and best of the best developers are under him, and he is doing not only designing and licensing and motivating. During COVID, he is the one who brought all the SROs, that is self-regulatory organization of Builders Association, NEREDCO, CREDAI, and all the developers, and a knowledge disseminating series which was started. That has enlightened me that he is one person like me, doesn't want to keep anything with him. Just now I was asking him, sir, Graha redevelopment, stakeholder council redevelopment we want to do, बोले सोशल वर्क के लिए मेरा जान कभी भी हाजिर है. Right now he said, and he is available for social work. So earning is part of life for survival, but anything that comes, if you are able to give it back to the society in whatever format, I think that is a great thing. Otherwise, a person from Vidyavihar, Sunday morning, spending their own money, because WRC has a policy not to reimburse the even traveling expenses. Because when the budgeting of the, these things are done, nothing is budgeted. In fact, even printing was not budgeted, but we had to manage. So at their cost they have come. So we welcome you, Manoj Bhai. The second person is again an engineer. But in this PIETA, we have engineers also, who are also entitled to practice, and Supreme Court also has said that if they are preparing a plan and working something, they can also say that themselves as an architect also. Council of Architecture is different, but engineering having that knowledge. So he is also past president of PIETA. Now, as I was introducing in the morning, he is one professional who also is a developer. Am I correct? So he is a promoter, developer, a lot of project also he has developed. So therefore I thought it fit that in the redevelopment, and both of them are so much working in the redevelopment, because Mumbai is full of redevelopment. PMC is compulsory or otherwise. So we welcome each one of you. We just started the session with the introduction, and Manoj Bhai is going to now explain who is PMC, what is his role, whether appointment of PMC is compulsory in the process of redevelopment. Manoj Bhai, over to you.
Good afternoon, everybody. First of all, thank you to Institute of Chartered Accountant of India, Western India region, and in particular Ramesh Prabhuji. He is doing excellent work in housing sector. He is a real guru of housing sector. I think the kind of work he is doing, he requires applause for. So whenever Ramesh Prabhuji gives a call, we are at his service. PIETA, anytime. Recently also, I think last week we attended at Jolly Bhuvan. There was a talk on BCA. So thank you very much. But boss, तिजोरी की चाबी तो आप लोगों के पास है, क्योंकि आप चाबी नहीं खोलोगे तब तक तो पैसा रिलीज ही नहीं होता है एज पर रेरा नाउ. So you are the key person in the real estate industry now. So our fees are also dependent on your certificate, unless and until you certify. So that's why we have come all the way, so that आपके साथ हम relation बनाए रखें. So आप हमारा भी ख्याल रखोगे साथ में. So jokes apart, basically project management consultant concept, earlier in engineering terms it was for construction only, so to monitor the construction. But in the redevelopment context, when 79A guidelines was published in 2009, that first time government recognized a role of a project management consultant. What used to happen prior to 2009, maybe redevelopment has started after 1998 and onwards, because buildings started becoming old and it required to pull down because it was beyond repairs. And at that time, what societies were doing, they were going haywire, approaching any developer, and without any knowledge, they were going into the transactions. And because of that, a lot of societies made huge errors, and they selected wrong people. Developers promised them some X FSI, Y FSI, rules kept on changing, and that you must have realized that additional floor the development was permitted, then it was pulled back because of structural reasons. So government thought, who is the person who can take the society's redevelopment process further? Because there is the first person whom the society will approach is a project management consultant. Because chartered accountant तो पैसा आएगा तब की सवाल है, पहले तो पैसा ही नहीं आएगा तो डेवलपमेंट ही नहीं होने वाला है. So that is how the concept of project management consultant came. It can be a civil engineer, it can be an architect who knows the rules and regulations. Because Bombay is complex. There, for each and every plot, there are 5 to 7 regulations applicable which you can propose. Now which is good for you? Which is giving the more FSI, that doesn't mean it will give you more profit, because there is cost attached to that. So these all factors prompt a society to appoint a project management consultant. Now what a project management consultant's role is there? First of all, he will have to get all the details. How much carpet area existing members are using, what is the FSI utilized, and what is the age of the building, because age criteria is there for some incentive FSI to be granted. It has to be 30 years old. Otherwise you can pull down a building, maybe it is 10 years old also. But if you want to claim some incentive FSI, yes, there has to be a 30 years criteria. If there is a cess building also, there is a age criteria. If you are going for a cluster redevelopment, there also age criteria is there. So once the PMC is on board, all these details, plot area. Now PR card will show 2000 square meters. On site it is only 800 square meters. 1200 square meter has gone in road. Society will be in the under impression के boss हमारा तो plot 2000 मीटर का है, हमें तो development 2000 मीटर का मिलना चाहिए. But boss, what is the physical site? Or there may have been encroachment. Societies may not have barricaded the plot, and there is a slum redevelopment or slum development has come in the adjoining property. So that also needs to be considered. So the plot area, the carpet area, the age of the building, the built-up area, all these are our preliminary issues which a PMC goes through and then formulates where the society, what are the credentials. And then the regulation part comes in. Now, if you are in Ville Parle, there is a height restriction. Even though FSI is permissible, whether building will be of that height can be constructed or not. If you are near the railway line, there are restrictions. If you are, now to obviously that Navy COD issue is coming up, so that also redevelopment has got stuck. In Ghatkopar area and many places, people have vacated the buildings, plans are approved, but CC is not being granted. And recently, I think Daisar also is having a problem for the height restrictions because of the civil aviation radar issue. Even in Jew also there are restrictions. So these all parameters a PMC needs to be aware, and whether the buildings, whatever they are planning, that much will be able to construct. by all these restrictive parameters, and then only you can come to a conclusion where what best commercial offer the society can derive. Now, rent, obviously whatever is going on in the market, that will be the rent applicable, because there are no bidding criteria as such. Corpus can be fluctuating. So obviously most of the societies, they concentrate on it, to get the additional area as such, rather than concentrating on corpus. So additional area, whatever you are getting, say 1,000 square feet existing flat is there, maybe it can start with 20%, it can go up to 50%, and somewhere in Mahada cases it is 100% also, and much beyond also. So it really depends on the criteria of the plot, the which section you are going. Suppose you are going through a Mahada proposal, then the sections are different, and so on and so forth. So once all these parameters are decided, and then PMC tries to fit in a property, fit in a new building, at least the box part of it, whether the building will be fitted in or not, with whatever the restrictions are there. Once everything is okay, then obviously you can go into a tender process. First the feasibility report is prepared, and then the project report, both goes hand in hand, and then oh yeah,
Feasibility, project,
both. So
it charges money to the society.
oh yeah, and obviously I'll come to that. So once that part is over, PMC tells ke yes, society can expect between 30 and 50%. So whatever developers you get, you should be ranging in this parameters, and you should be happy to accept that. Somebody will ask you, why not more than 50 also? So there are financial criteria. So what we do is, you guys prepare the project balance sheet after the profits are made. We make the balance sheet before the project profits are made. So that is how the costing works. And on the day one, the entire costing is worked out. The majority of the premiums, the cost, the stamp duty, GST criteria, construction cost, the rent criteria, marketing cost. So whatever the cost the project is going to incur, pin to piano, is worked out. And accordingly, suppose then we try to run through what a developer should get a reasonable profit. So we go reverse. At least 30 to 35% profit we reserve for the developer, so that he can give a good product
On the cost.
on the entire project cost. Okay, suppose 1,000 rupees is the cost, and 350 rupees he should earn profit, and in 650 now you have to fit in. So what we run through is, first try with 25%, how much profit a developer is getting. If the profit is more, we increase the percentage, so the profits come down. So we then try for 35%. Sorry? Increase on the existing area. Suppose 10,000 square feet is the existing carpet area, and 25,000 square feet you are getting in the project. So 10,000 is existing, and suppose 30% extra means 13,000, you are left with 12,000, and whatever the surrounding localities rate is, expected rate, multiply by that, and whatever the figure you are getting, if it is working out to about 35% profit, then it is okay. Or either you have to reduce. If the profit is more, then you increase the existing members. It can be, that's what I said, the range can be between 30% to 50% also, and in specific cases it can be higher. So once that is formulated, so PMC gives a roughly idea, okay, yes, this much you can expect, this much corpus you can expect, this much rent you can expect, this is the timeline you can expect. So this is how the parameters are. Society, if it is okay, then the tendering process starts. So the tendering also can be of two types. It can be a public tender, or it can be private circulation. Normally for large societies, it has to be a public tender, so there are no objections, or there is no pinpointing fingers at somebody. If it is a small society, less than 20 members, obviously private circulation is better, because in the cost and everything, because developer is going to come from the same locality, he is not going to be an outsider who is conversant with the particular locality where the redevelopment is happening, and that then it is taken in the next level. Developers are interviewed, their sites are seen, their financial side also is checked. What is the solvency certificate is being asked, okay, what is their standing, and obviously for major projects, the corporates and all are also entered into field. Now even Raymonds have entered, Shapurji and all other guys are already doing it. Tatas have entered now, redevelopment. So the way forward in Mumbai is redevelopment. Whether we like it or not, this is going to be our life and this is going to be the realistic picture. So once the developer is shortlisted, maybe if there are 10 developers who have shown interest, shortlisted to 3, then the negotiations happen. And in the negotiation, even though the PMC has suggested 30 to 50% and somebody is giving you 55%, it's welcome. But that doesn't mean the project will go through. So because the guys who have offered more, and if his financial credentials are not good, his reputation is not good, his delivery time is not good, so society has to take a judicious decision, what actually they want. See, 2-5% extra area difference is not going to matter much unless and until the guy has to be good. Because if he doesn't give in timelines, and the issue is once you shake hands with the developer, they take 1 or 2 years or 5 years also for the approval process. If the approval process is delayed, when the construction will start. So most of our colleagues are also there. The day when we have entered with the society, the first day, and when they have entered into the final new house, that time period is almost 10 years.
10 years?
Yes. I'm not joking. You can check our files. The first day, first resolution society has passed for redevelopment, and the final when they have received the new house keys, that process, see, 4 years is the construction period that you cannot avoid. 1 year is approval process, you cannot avoid. The 5 years which society has taken, that is too huge a time. But now societies like Ramesh Prabhuji's initiative, a lot of education has happened. People are also aware, and that's why they are approaching professionals, PMCs also. So that's why the things are happening faster now. Earlier, the gestation time was much bigger. Now, even though the first day the society takes a resolution, even 1 year the developer is appointed. So that is how the things are. Now the rules are also stabilized, because in between the regulation changed from 2015 to 2018, there was a limbo, and the rules were every time changing. That's why also there were issues. But now I think it is for good, and a lot of relaxations are there in redevelopment issues. Yes. Yes. Because if you have to follow, see, first.
In case of a RERA project, it is compulsory.
No, RERA and PMC has no relation. Honestly, I'll explain you. If you are going for a self-redevelopment, okay, you are employing an architect, you are employing a licensing architect, a designing architect, a contractor, you are yourself owner, nothing is required. PMC, see, that is how I think rules are not finalized, but honestly, I being an architect and engineer, I will take side of engineer and architect only. So that is how the things are, because the rules and regulation.
Who is competent person professionally to design a building, execute the building? Naturally, architect. Who is better person to monitor the construction, management of the construction? Engineer. If the engineer has a development control promotion rules regulations, and he also has a licensing permission, so he can be appointed as a PMC. That's what exactly we are saying. A project management consultancy is a service providing firm. If it is a service providing firm, can Dhirubhai Ambani's son Mukesh Ambani can start a PMC job? The answer is yes. Whether he is required to be qualified as a architect engineer, the answer is no, because it's ultimately service providing entity. But one of the requirements is that the person, if that's company firm, at least should have one architect or engineer on the payroll or as a director who will monitor the job of a PMC. Now you got it? So therefore,
So in essence, the bottom line, PMC under or with or without RERA, PMC is not related with RERA.
that's correct.
It is in the interest of the society to appoint a PMC.
That's correct.
The professional work can be carried out.
So now,
No, yesterday we discussed law and procedure of redevelopment. In that we have ultimately concluded that section 79A direction is a direction issued by the government by exercising the powers. This direction has never and ever been set aside. Case to case basis, the high courts have opined that in a given case, even if the 79A direction is not followed, the spirit of 79A is followed, and therefore it is, even if certain procedure lapsed, still the appointment of the developer has been confirmed. But never and ever they said the 79A direction is set aside. And nobody has challenged section 79A per se by filing a writ. Everybody has gone to the court to say that I, an individual, has not been given proper thing, our society is not transparent, and with the facts and figures they have gone, therefore section 79A is not set aside. It's a statute, and in which appointment of the PMC is one of the requirements. So therefore, to conclude, appointment of the PMC is a must. If it is not appointed, at least you need to get certain guidelines from the professionals. Second, it is as per the directions. And who can be the PMC? PMC has to be professional or a body which has engaged the professionals. Then only you can be appointed, and that is how we in the Redevelopment Stakeholder Council under the leadership of Gautam Chatterjee, we have started defining. Okay, so now to Vilas Nagalkar sir, our Manojji has many times repeated feasibility report, feasibility report, feasibility report. We know in economic terms, feasibility report, project report, viable report. But in the case of a redevelopment, how feasibility report is worked out, what are the contents of the feasibility report, what are the ingredients of the feasibility report, if you can explain, that will be better.
All of you are, I think most of them are chartered accountants. So you are professional, all professionals here. So there is a fine line between profession and business. That is, profession is followed by with some ethics. Whereas in business, the ethics is not of paramount important. So PMC, if you see, there is no statutory body which is what you call overseeing the role of a PMC, first thing. So for the architects, for chartered accountants, there are Institute of Chartered Accountants are there. You should pass the exam. You should have certificate from certain college degree. So some affiliation with some institutions is required. Same ways for doctors, same ways for engineers, same ways for the architects. But as far as PMCs are concerned, there is no such statutory body as of today. And yet some people will say that government approved PMC or BMC approved PMC. So these things do not exist. There is no guideline or any statutory forum which can recognize the PMC as their members basically. Okay, so coming back to his this thing, when the architects roles, that I will try to say more, because I am architect and our body is architects engineers body. So whenever the architects are there, so they are there for the project right from beginning almost till the end. So conception of the project till the completion of the project. These are their babies basically. Buildings are their babies, or the projects are their babies. So they want to see how the things work out. As far as when the architects or anyone is in the role of PMC, so what are the things which one needs to understand is, like, it's a when you go for a say bride or groom selection, so who could be a good person for prospective groom or prospective bride? So there are n number of things are to be considered. Same way, this is the selection process, and to arrive at this decision, the PMC's feasibility report is helping us. So if you talk about the content of the process of the feasibility report, first we have to assess what is the existing parameter or what are the existing facts. First we have to find out what are the how the plot is born or birth of the plot or the area of the plot or the facts attached with that plot. There is most of 90%, 99% there are existing society buildings which are having the land appertaining them, and that may be owned by them or still owned by the builder. That those are things. So there is a legal history attached to it that has to be assessed. Then comes the present status. So what is the present status of the plot? How much it is affected by the statutory norms, and how much the present proposed building, when you are going to redevelop the building and have the new building in its place. So how the norms are going to affect the proposed building. So all these parameters, these are the technical parameters. So these person of a technical background who knows about these facts and aspects, technical aspects, he will try to understand, say what is the area of the plot, start with the area of the plot, whether that area is going to reduce, increase, or how it is, and based on the present norms, say your society is there, that is residential society is there, if the members are going to be rehabilitated there, so how much area for the residential purpose would be there in the new building. That is the first and primary concern. Now how to make this project viable, that is the second aspect. First, in the given what you call scenario or given present status of that particular plot, the architect will assess what are the net plot areas, and based on the net plot area means after some reservations, road lines, whatever is affecting the plot. So after that thing, he will assess what is the potential that can be attached to that plot. That plot has got inherent potential in terms of a free FSI. So own FSI or the plot FSI is the free FSI. The basic concept is that simple thing, 1000 square meter plot, one FSI is there in the suburban area of Mumbai, so you get 1000 square meter construction. On that 35, whatever FSI we talk it, 35% fungible FSI is allowed as a free basically. So if the existing building itself is constructed of 1200 square meter and the plot area is 1000 square meter, you get a 1200 square meter as a protected FSI. So there are some inherent potential attached to the plot. Then you attach to that plot some external potential, that is from the outside. You take the government FSI, you take the TDR from the outside, and you enhance the potential of that plot so that the buildable area increases, and at the moment only the existing rehab peoples are there. So there is some additional component is there which we can sell it in the market, and from that sale proceeds one can what you call offset the cost of reconstruction for the existing member without any cost incurred to them. So these are the basic criterias. Now while going for or scouting for the schemes of the redevelopment, so there are plain vanilla schemes like existing residential building is there, and that will be constructed as a new residential building after redevelopment. That is a plain vanilla scheme. Then there are some clubbing of scheme. There are n number of options available. Earlier we had a limited options, but with the new regulations DCPR 2034, we have n number of options available wherein different schemes can be opted. But again, each team will come with its own positives and negatives. So based on that, based on the what is the most suitable scheme or what is the plain vanilla scheme is going to give, so architect will work out what is the maximum potential for a given plot, and that potential when you sell in the market, excess potential after rehab, when you sell in the market, whether the project is feasible or not. So that is basically his report is there. So these are the, now when you talk about the contents of the feasibility report, he has to take a legal cognizance. What is the legal status of the plot, ownership of the plot, what are the DP remarks, what are the road line remarks, what are the town, if it is a plot of town planning scheme, what are the town planning scheme remarks, what are the, if any metro line is passing from the plot, if any water tunnel or if any highway or something is passing nearby. So all these things affect. So the content of the feasibility report should they should comprise all these aspects which can affect the development. Whatever these aspects, those needs to be enumerated, those needs to be put up in the report. Okay, so these are the basic thing. Then comes the what is the existing society, how many members are there, whether the members are residential, all the residential members are there, or some doctor clinic has been started. Sorry, doctor clinic has been started somewhere. So there is something called as an incentive FSI for the redevelopment, that is called 33(7)(b) incentive FSI of say 100 square feet or something per tenement. Now that FSI, incentive FSI, would not be given if someone has started a beauty parlor at his home and then the assessment department shows that as a non-residential use, then he will not entitled to get that 100 square feet this thing incentive FSI. So all these things should be reflected in the feasibility report, and then it gives you the realistic picture how much the final incentive figures or the free FSI figures will be affected, will be there in the final project basically, and then you have to exactly work out what is the sale area. So all sorry, all these are the what you call different parameters which comprises the feasibility report.
We will come to FSI little minute. So, sir, Hingu sir, we are talking about feasibility report. We talking about FSI. Now, these all coming from naturally development control and promotion regulation. Can you enlighten? Because we are chartered accountants, we understand income tax under different sections. We never heard about Maharashtra Regional Town Planning Act. There is a law called Maharashtra Regional Town Planning Act, which has appointed various planning authorities for the various jurisdiction. Okay, this Maharashtra Regional Town Planning Act has mandated by the government that each planning authority should come out with the development plan once in 20 years and implement that development plan. They have to get a development control and promotion regulations in which various FSI formats are given or regulations are given. So can you enlighten us what is FSI, what is TDR, what are the different regulations in the development control and promotion regulations, at least in Mumbai and outside Mumbai, how it is working? Thank you.
And thanks to Prabhuji for inviting us. There are various types of regulations where we have various types of FSI. Now, if I go to MCGM, there are regulation 30, which is a TDR regulation. 33(7)(b) is an incentive FSI for existing buildings with society, which is more than 30 years old. 33(7)(a) is a tenanted property. So, if I go for say redevelopment, the FSI is based on the road width that your society is abutting. For a 9-meter road, if I go for a regular redevelopment with TDR, then the maximum FSI permissible will be 2 FSI. One is your plot area and 0.5 will be your government FSI and 0.5 will be your TDR. Plus whatever fungible FSI we get, 35% is a cap of fungible FSI. So whatever FSI is there plus fungible FSI will be your FSI which is available on a 9-meter road, that is 2 plus 35%, 2.7 will be your FSI on a 9-meter road. For 12-meter road, it will be 2.2 plus fungible FSI. For road with having 18-meter road and more, 18 to 27.5 meter road, it will be 2.5. And if your road width is more than 27.5, then the FSI will be 2.5 plus fungible. So this covers the aspect of MCGM, where MCGM is a planning authority. Now there is a regulation 3319 where if you plan a full commercial building, then the FSI can go from 3, 4 and 5. If your road width is 12 meters, it will be 3 FSI. If your road width is more than 18.3 meter up to 27.45, then the FSI will be 4. And if the road width is more than 27.5, that is linking road and SV road, the FSI can go from till 5 FSI plus fungible FSI. So this is regulation where MCGM is the planning authority. Now if I come to say MHADA under section 33(5), then the FSI for MHADA is if your plot is less than 4,000 square meter, the basic cap FSI is 3 plus pro rata which is offered by VP MHADA. The pro rata can range from 20 square meter to 120 square meter depending upon the Mahada layout. So that is, this pro rata is distributed according to the capacity of the society members. Means if you have a 20 society members, then the pro rata will be 20 into 20. So per member gets 20 square meter pro rata FSI. So whenever, if there is a Mahada layout, then we have to, while preparing a project report, we have to first check what the pro rata is available for that layout. If I consider, say, Charkop, the pro rata ranges from 20 square meter to 25 square meter. If you go to Juhu area, then the pro rata is 82, and if you are somewhere in Goregaon East, the pro rata is around 78 square meter. So whenever there is a redevelopment of a Mahada building, we need to first check the pro rata. So the PMC has to check the pro rata, what is available, and on that basis we need to prepare the project report. So now if I go to SRA scheme, SRA is a different planning authority. SRA, the regulation for society redevelopment will be 3311. Again, every planning authority considers the road width as the basic criteria for distribution of FSI. Even in SRA, if I have a road width of minimum 12 meter up to 18 meter, the FSI is 3. Plus fungible, whatever fungible FSI is available for sale component. If the road width is 18.3 meter and above, the FSI cap will be 4 FSI. Only in Mahada there is no FSI cap. Rest everywhere in 3311, 3311 there is a cap in FSI, 337A, 7B, everywhere the FSI is capped as per the road width. Only Mahada and 3310 proposals, that is slum proposals, the FSI is not restricted. It depends upon the rehab component that you accommodate in the society. So this is the basic criteria where different planning authorities have different FSI, but everyone follows DCPR 2034. There are some instances where SRA or Mahada can bring in a circular and modify the approval process, but the cap of FSI or the distribution of FSI is always regulated through DCPR 2034. No, you have the option to choose the regulation. You don't have the option to choose the planning authority. If you want to redevelop a 33 under 3311, say PTC ka scheme hai, then you have to go to the SRA only. You don't have option of choosing a planning authority.
Okay, so
33.5 is always Mahada, 33.11 is always SRA, rest all regulation, 33.10 is SRA, rest all regulations comes under MCGM.
so these regulations are basically under the DCPR.
Yes.
So the plot is already been defined under the this DCPR.
The plot is always defined as per the PR card and the CTS plan that you have, right? Now when you go for redevelopment, your PMC will guide whether under this regulation the project is viable or under which regulation the project is viable. Nowadays, most of the societies are going for 3311 because the premium which is to be paid to the government is 10% of what we pay to the MCGM. That's why the PMC's role comes here, where they define under which regulation the society will be more beneficial and will get more area.
Many people are advocates also, and many are new chartered accountants and entering into the area of redevelopment. Let me give some small definition of what is FSI, and let me relate it to income tax so you'll know much better. FSI is a floor space index. What do you mean by floor space index? Whatever is the land parcel, suppose there is 10,000 square feet of land, if the FSI is 1, that means on that you can construct 1 FSI. If it is 1 FSI as per the DCPR or Development Control and Promotion Regulation, that means you can construct 10,000 square foot. Is it clear now? In the income tax, we know if this is the income, let us say capital gain, this is a rate of interest. If this is the income from, let us say, shares and all, short-term gain, this is the income tax. Same way, these are the things given by the income tax about the rate. Here, the FSI is given by Development Control and Promotion Regulations. Are you clear now? The second is, he said, the regulation number, 30, regulation number 30, then he said 33.7, 33.7A, 33.7B, then he said 33.10, and I think 33.11, 33.19, so many regulations. The way in the income tax, we have different sections to deal with the different type of income and tax on it. Same way, here is a regulations depending on the type of land, depending on the type of regulations which is beneficial to you, you can take. So 33.5, what is 33.5? 33.5 is applicable for माड़ा. जहाँ माड़ा का जमीन है उधर 33.5 रहेगा. ये मेरा जानकारी नहीं है. लास्ट जॉली भवन में बहुत अच्छे तरह से मनोज देसरे ने बोला 33.5, आप इधर उधर मत देखो, माड़ा, आप इधर उधर जाएंगे तो गड़बड़ हो जाएगा. फिर मैंने बोला यार एसआरए होता तो क्या होगा? बोला एसआरए को आपको और हमको मालूम होना चाहिए 33.10, आप इतना बाहर कर लो, और फिर मैं नहीं है तो आप स्टेप नहीं बन सकते हो. So coming to the point, so that FSI is something provided under the Act. Now, as he has rightly pointed out, in the year 1991, that is the earlier DCPR, that is called DCR, 1991, there was a provision to load TDR, Transfer of Development Right. पहला FSI था, TDR नहीं था. Now what is TDR? TDR is Transfer of Development Right. 1991 में, when the government realized there are a lot of housing societies and various areas where redevelopment is required, in order to give additional construction permission, they said as against one FSI, you can load one TDR. So that now you will be able to construct two FSI. मतलब one FSI, one TDR. What is TDR? Transfer of Development Right. Hey, Transfer of Development Right होता क्या? जब DCPR बनता है, that is called Development Plan, 20 साल में एक बार बनता है. The government says that I want your land for garden. I want this land for metro station. I want this land for maternity home. I want this land for, let us say police station. I want it for road. I want to construct bridge. आपका जमीन मुझे चाहिए. यार डेवलपमेंट प्लान तो डाल दिया, रोड वाइडनिंग करना है, ब्रिज बनना है, मेट्रो करना है, पुलिस स्टेशन करना है, पोस्ट ऑफिस करना है, सब इंफ्रास्ट्रक्चर करना है. जमीन तो पब्लिक का है. As we yesterday discussed under Article 300A of the Constitution of India, the property belongs to you. It's your constitutional right. How can government take over? Then the government said they don't have money also to buy. Because you are the owner. Therefore, government said, whatever the land that we are taking, we are not able to give you money. But as against that, we will give you a transfer of development rights certificate. That is called TDR. मान लो उन्होंने 10,000 स्क्वायर फीट का एक जमीन ले लिया, वो 10,000 स्क्वायर फीट का TDR सर्टिफिकेट देते. आर यू विद मी? ये जो ट्रांसफर ऑफ डेवलपमेंट राइट सर्टिफिकेट देते हैं, इट शुड बी मार्केटेबल. अपन इंग्लिश में या आम आदमी में समझते हैं, इट शुड बी मार्केटेबल. हाउ कैन दिस बी मार्केटेबल? अनलेस अंटिल देयर इज अ डिमांड. अभी समझ में आया? डिमांड एंड सप्लाई मैंने बताया. सो द TDR सप्लाई तो बन गया, देयर हैज टू बी डिमांड. हाउ कैन डिमांड बी क्रिएटेड? द डिमांड इज क्रिएटेड गिविंग एडिशनल TDR लोडिंग टू द एग्जिस्टिंग बिल्डिंग, सो दैट एज अगेंस्ट 10,000 स्क्वायर फीट ऑफ वन FSI, अभी 10,000 स्क्वायर फीट का TDR लोड करो. मतलब क्या हो गया? अभी TDR का मार्केट बन गया और सप्लाई भी BMC ने कर दिया. तो अभी जो रेडी रेकनर वैल्यू है मार्केट, नाउ डिमांड एंड सप्लाई. TDR कम है तो TDR का भाव बढ़ता है. मान लो TDR ज्यादा आ गया मार्केट में उसका प्राइस कम होता है, डिमांड एंड सप्लाई. सो दिस इज हाउ द TDR rates are determined by the market force, and then TDR also gets cost, and this is becoming transferable through the BMC records or planning authority records, and the one who has surrendered the land, he gets his price of the land by selling the TDR certificate to the person who wants. अभी concept समझ में आ गया? Now, when we are doing a feasibility report, we have to determine, or when we are going for a redevelopment, that is what they are saying. First and foremost, we have to look at in a feasibility report what is the total potential. जैसा इनकम टैक्स में हम क्या करते हैं, हमको कम से कम टैक्स भरना है, तो हम क्या करते हैं, टैक्स प्लानिंग करते हैं. समझ में आया ना? कल मैंने बताया ना, why we are going for self redevelopment, to do the tax planning. So everybody does the tax planning. Tax evasion and tax planning is different. Within the four corners of the law, if you are able to do the tax planning, government appreciates. Same way, here is the development control and promotion regulations, which gives you many regulations, and whichever gives you maximum potential to construct. On that it can be done. Now, I want to ask you, Suyog said, can explain me why in MADA there is different FSI, and I was told that even FSI goes to 5, 6, 7, 8, 10, जबकि प्राइवेट लैंड है उधर FSI 2, maximum fungible FSI 2.7. What is this fungible FSI and why MADA gets more? Can you explain?
Thank you, Ramesh ji. Before I dwell into MADA and the MADA domain, MADA colony redevelopment, I'll fill in some gaps. Certain questions were asked and my colleagues have answered them. I would like to add to whatever they said. Let us first appreciate what is this redevelopment. If there is a land, say in a village, there is a farm and there is a small hut constructed by the farmer for the farmer to stay. That hut gets old. Does somebody come and tell the farmer, I will construct your hut afresh, I'll give you rent for staying outside your hut during the construction process, plus I'll give you corpus fund? Does this happen anywhere? No. It doesn't happen. But it happens only in Mumbai. And now in Maharashtra, with the new UDCPR, United DCPR, which has come for Maharashtra. So Maharashtra, I believe, is the only state wherever anybody who has got a dwelling unit, may it be a slum dweller, a person staying in a chawl, or person staying on a Malabar hill, is assured of a new house free of cost. So for this to happen, what is being done is the FSI, land is limited. All started with Mumbai. Mumbai, as we all know, is bound by sea on creek on one side and sea on another side. It's a peninsular kind of a city. So we have limited land available. More people are coming in. There is no space to build more. Land is same, so you can only go higher. Common logic. If I have one storage structure, if I what the slum dwellers do? Initially they had only one storied house. Family increased, son got married, they put up one more floor. So now two families are staying. It's a common sense. So that's why government has increased this FSI by various regulations. It started in 1991. In fact, there is a parallel between Harshad Mehta and government. 1990, if I am correct, most of you will vouch, CAs are here. Harshad Mehta scam happened because Harshad Mehta started printing duplicate share certificates. Right? Because he was sure that once the spiral will go on, the shares will increase. When the share comes back to me, I will destroy the duplicate certificate. And that's how the spiral was built. That was one of the ways in which spiral was built. Government did the same thing in 1991. Government, as Prabhuji rightly said, didn't have money. They wanted your land, didn't have money. So government said, I will print money. TDR is indirectly a way by which government officially prints money outside RBI. TDR is a negotiable instrument. The DRC, Development Right Certificate, which you get when you surrender your land to the government, government is broke, doesn't have money. So what government does? Instead of money, gives you an IOU and tells you This IOU, you don't give it back to me. Give it to him. He will pay you the money. Right? So, why will he pay you the, why will he honor my IOU? Why will he? So then I told him, okay boss, you honor, I'll give you more development potential. You build more. So this was a very unique and intelligent way of city planning. See, I jocularly called it a printing of money, but this, if you see as a concept, is a unique concept which has helped Mumbai to generate so many infrastructure facilities without spending any money. See, finally, if the corporation was to pay money to the person for acquiring land, whose money would it be? It would be your and my money, right? So that much money would be available less for actual developmental works. रोड का प्लॉट लेने के लिए जो पैसा जाता था वो बचा के उतने पैसे में रोड बना दिया. So in a way, this is a very intelligent concept of city development in which, without spending money, government has generated one way of FSI. Second way, one way of incentivizing the handing over of land. Now, what has happened is Mumbai has also got unique problems. Like we have cessed buildings in the Mumbai city limits. What had happened in 1940, there was a Rent Control Act. Those of you amongst those of you who are here will understand the legal part of it. Manoj bhai, myself, we are students of law, even though we are not practicing architects. So we also understand a bit of law. So what had happened is, there was a Rent Control Act. Government stopped the rent wherever it was in 1940. If you are saying, say, paying a rent of 5 rupees, which was a king's ransom in 1940, remained fixed. The outgoing for a property owner kept on increasing. So what has happened is, the property owner owns a beautiful piece of land on the Malabar Hill or in Fort area. But that property owner cannot enjoy the fruits of its property because rents are fixed. So the building started, property owner had no incentive to maintain the building. Building started crumbling. So government came up with a new regulation, 33(7), whereby somebody comes, redevelop the building, pays something to the landowner as a compensation for the land, gives free house to the person who's staying as a tenant of a certain basic minimum area, and earns profit. So FSI was increased to ensure landowner gets money, the tenant gets a free house, and the developer makes profit. So now you understand how the redevelopment process has started. TDR was given, existing building having consumed say 1 FSI, additional was allowed. So then I come as a developer, I say, okay, allow me to build on your plot. You are a society, you are a landowner, allow me to build. So you take some money from me in terms of additional area and say, okay, rest of you build, rest of it I build, I sell in the market, pay to the government all the taxes and duties, and take my profit home. That's how entire market of redevelopment has come in. That's how the entire housing industry of Mumbai is presently running. If there are 100 projects going on in Mumbai today, I'm very sure 95 of them are redevelopment in one form or the other. When we understood about cess building, now we come to MHADA building, which was the question which he asked me. See, there are 116 MHADA colonies all over Mumbai. What is MHADA? MHADA by statute was formed to create a rental housing stock in Mumbai. Okay, when Mumbai started growing, I'm talking about 50s, when the Mumbai started growing, there was a huge industrialization that was happening. A lot of blue collar workers were coming. This was the second wave of blue collar workers coming into Mumbai. First wave came when the textile mills came up. That time they were absorbed in chawls, which was tenanted property. So whenever a blue collar worker visits any city, historically, you take any city, London, New York, in any city you take, the blue collar worker doesn't have the capital to buy a house. So blue collar worker will definitely go to a rental housing. That's why the first wave of blue collar workers which came to Mumbai for docks, for textile industry, got into chawls, which was built by through private money on private lands because they were getting sufficient returns in terms of rent. Rent Control Act killed that. So nobody was actually building houses for rent. Nobody. So then, how will these new wave of people who are coming in for, because Mumbai had huge industries coming up. You remember, we see Mahindra and Mahindra tractor division came up on the eastern, this LBS mark, entire set of industries was running right till Thane, then Western Express Highway. Again, a huge number of industries were there. So all these needed blue collar workers. MHADA was formed, were given large tracts of land by government, virtually for free or at a nominal cost of 1 rupee. Large 2 hectare, 5 hectare lands were given to construct colonies which were mainly for low income groups and EWS, economically weaker sections. They were typically like those BDD chawls of the old. BDD chawl was a precursor for MHADA, where BMC built the BIT, Bombay Improvement Trust, which was then merged with BMC, built those houses, small 120 square feet houses. Similarly, MHADA built houses, but now for this, money was given by the government to build those houses. MHADA also built certain bigger houses for middle income groups mainly, through which money was recovered, at least the construction cost plus some surplus was recovered, and that was in some way partly subsidizing the cost of construction of these LIG houses. Remember well, this LIG house was not given for free. MHADA took certain initial token, initial deposit or non-refundable deposit from the member, which covered the cost of construction. So virtually the person had bought the house from MHADA, but the person remained a tenant of MHADA. The onus was on MHADA to maintain that building. Initially everything was hunky-dory. MHADA had funds, government had given funds, so the colonies were maintained. When these mass housing colonies were built, many a times the quality aspects was not taken care of. So over the years, the maintenance became costlier and costlier. Even a small pipe has to be replaced, MHADA was doing it. A sewer line was choked, MHADA was cleaning the choke. So that maintenance cost kept on increasing. Politically, nobody allowed for the rents to increase. See, even in case of MHADA, initial maybe it was a 200 rupees rent. Nobody allowed it to be increased. So the income remained same. MHADA was perpetually in red. Perpetually Mumbai board was in red. They didn't have money. So MHADA said, boss, I cannot maintain these buildings anymore. Government said, MHADA cannot maintain this building anymore. What do we do? They said, you please form a housing society. Pay me further money. I'll lease you the land. And I will, you become the owner of the building. So far so good. The society became the owner of the building. The owners of maintenance shifted to the societies. MHADA was the dumbest landowner in the history of India to give away lands at pittance. आपके घर में अगर दीमक लगा है, आप घर को किसी को बेच नहीं देते हो, पेस्ट कंट्रोल को बुलाते हो, दीमक क्लीन करते हो, राइट? दीमक लगे इसलिए कोई घर बेचता नहीं है. MHADA ने अपना घर, ये मेंटेनेंस की दीमक लगी हुई थी, इसके लिए पूरा घर बेच दिया कि आप ले लो भैया, आप लेसी बन जाओ, आप बिल्डिंग के मालिक बन जाओ, छुट्टा, मैं मेंटेन नहीं करूंगा. So a beautiful piece of land which was given to MHADA to create housing stock for this city was now became a leasehold lands for the societies. Now the societies became, so the third party right was already created on the land. MHADA principal landowner, there is a society which is the landowner. Now the society has become old, 60 years old, 50 years old. 60 years is a general age of any concrete structure. Societies need redevelopment. Who will do it? So again FSI. Who will do it? FSI. यहाँ पर कोई भी प्रॉब्लम है मुंबई सिटी में for town planning, solution is FSI. So additional FSI was granted for specially only for MHADA colonies. This happened prior to 1991, 1989. Even before the DCR came in 1991, additional 20% FSI was granted for MHADA colonies. This 1.2 has eventually increased from 1.2 to 2.5 in 2008 from 2.5, then now it is 3 for plots up to 4,000 square meters and 4 for plots beyond 4,000 square meter and abutting 18-meter road. Now, so far so good. There is FSI of 3. But this 3, there is a small, see, as it happens in your Income Tax Act, all incomes are taxable, but some incomes are not incomes. Right? Corpus fund is not an income. So it's not taxable. That is what I was told. Income
Yeah,
tax
you are
act-
right, you are right. Income,
That,
corpus is not taxable.
yeah. So all incomes are not taxable. Right? So same thing came here. FSI is 3 on gross plot. Now, if you see a Mada colony, most of you must have seen a typical Mada colony. There are large grounds, playgrounds. There are roads going into the colony, and there are buildings built. The road also had FSI. The playground also had FSI, because FSI was on gross plot. Not only on the plot on which the building was built, but also for the plots which were kept open, maybe for road, for garden and all that. Right? So FSI was for the colony as a whole, global, not for individual plots. Now typically in a Mada colony, the built up plots were 50% or 40 to 50%. Remaining 50% went under road, under grounds, under playgrounds and all that. So effectively FSI is 6. 3 on my plot and 3 for the 50% of the plot which is kept vacant. On a 100 hectare land, buildings are built only on 50 hectares. 50 hectares are open, but those 50 hectares also have 3 FSI. So effectively FSI is 6 on the plot. Now there is a further twist. What happened is when the buildings were built, typically MIG and HIG are larger houses. MIG were in the range of 500, 600 square feet or 400 to 600 square feet. HIG was beyond that. Now these are larger houses. All those who plan buildings will know that when you build a larger house, you for the same height of the building, the number of people are less. Say if I build ground plus 4 building and have only 500 square feet flats, there will be X number of people. Now I divide it into 2 parts. I divide it into 2 parts and make it 250 square feet house. There will be 2x the number of people staying. I divide into 3 parts, 3x the number of people staying. LIG houses were one third of the MIG house, roughly. So the number of people staying in the LIG building were much more as compared to MIG. Government in its own wisdom thought that, boss, I built a house of 180 square feet where those people stayed, poor people stayed for so many days. Now, for a human being to stay, a slum dweller gets a 300 square feet house free. So they should get 35 square meter minimum, which is about 384 square feet. So house fit for a human being was fixed in Mumbai as 384 square feet. So now somebody who's staying in a 180 square feet house has to be given 380, more than 2x. FSI is 3. If 2.5x is going only in that person's house, it is no more viable. That 0.5 will not be sufficient to subsidize the remaining housing. So Mada twisted further. Mada said, this FSI which is generated on common amenities is my FSI. It comes into my KT. Now how will I divide? I will divide it pro rata. That means number of houses on a plot. I will divide for a colony entire FSI, additional FSI, divided by number of houses in the colony. That is pro rata per house. Now I will give it. So for same plot of land, LIG had more houses, MIG had lesser houses, one third the houses. So LIG people started getting lesser pro rata share. Say a typical MIG building has got 16 to 24 flats on that plot. Similar plot for LIG will have 80 flats. So 80 into pro rata, 25 into pro rata. So LIG people were given more on a same square feet of plot of land, get more FSI, more pro rata. So then the entire equation gets skewed. For MIG, you get lesser FSI. For LIG, you get more FSI. Now it has become so skewed that in some cases, the FSI goes to 10 plus. Now what has happened is, see, all this has brought in its own complexity for the professionals. What are the complexities? When a proposal comes to, say the proposal comes to me as PMC, there is why a professional has to be a PMC who understands the regulation and understands building and understands building planning. Why? See, what used to happen in the olden days, my old clients in the old DCR, they used to sit with me, understand the feasibility reports. Some of them also took away the Excel sheets. I as a professional believe in dissemination of knowledge. So we had given those Excel sheets. The client employed some very talented MBAs, good at Excel sheets. Okay, so they started working on Excel sheets. And the profit, you all work on Excel sheets, you all work on Tally, you all draw balance sheets. On paper, both the balance sheets are same. I sell kachra or I sell gold. Profit is profit. The same tax will be tax will be levied. But the business is different. That's why professionals are not businessmen. We understand housing industry very intimately, but very few of us are builders.
Except one. we have exception here.
I said very few, sir. So, issue is, it's very difficult to see. Most of you understand balance sheets very well. Most of you understand profits very well. How many of you can actually run businesses? Very few. I'm not saying none of you, but very few.
Correct.
So now what is happening is, I'll just take one more minute now. I know we are running out of time. I'll take just one more minute. Now what is happening is, that's why on an Excel sheet if you make, you will see that LIG will have FSI of 11. So there are windfall of profits. But there is height restriction. It is impossible to build a building with 11 FSI or plan a building with 11 FSI. Even if I am able to plan a building, the building will be so inferior in terms of town planning norms that sale rate will be depressed. Many a times that FSI is not usable. All these things are taken into account when we make a feasibility report. Is it feasible to consume that FSI? Number one. Is it feasible to make money out of this entire proposal? Number two. May it be self or may it be builder-led redevelopment. Finally, there has to be some extra left at the end. Is it feasible? That is all that we see. So, in nutshell, that's how MHADA FSI is generated. Yeah. That's how MHADA colonies are getting redeveloped. Over to you, Prabhu.
Yeah. See, every redevelopment, every regulation has a story behind it. He just explained you the story of MHADA. There is a 3310. There is a story of SRA. In order to give slum people free housing, that is done. There is a story of 33-7. In order to give a tenanted cess building house, so incentive FSIs are given. So the way income tax gives lot of incentives or more depreciation or income exemption in special economic zone and all, in order to promote certain things. Now there is a 33-19 which is talking about commercial. Because Mumbai they want more and more commercial to be done. So they give 5 FSI if it is a commercial building. So this way the FSI is generated to implement the development control and promotion regulations, that means development plan. So there in Mumbai for industry FSI is 1. They never increased. Why? Because they don't want industry to be there. They want commercial officers to come. So therefore all industrial estate in Mumbai are closed and now they are going for offices. Because यदि office करता हूँ तो मुझे 5 FSI मिलेगा. Now they don't want mills in Mumbai. So they came out with a different regulation for mills. So this way the government, when they decide that certain things to be done, they come out with the various regulations to see that the redevelopment takes place in a planned manner. Sir, over to you. Because we are breaking at 1:45. In fact, 1:30 was the break. But anyhow, we have combined this session. I was able to give you one question. But I think you have covered well. Sir, we are all keen to go for self-redevelopment. Since yesterday, we are only talking सेल्फ रिडेवलपमेंट कैसा किया जाए? सेल्फ रिडेवलपमेंट बहुत बेनिफिट है. कैन यू एक्सप्लेन हाउ सेल्फ रिडेवलपमेंट इज पॉसिबल, whether it is beneficial to go ahead and how it can be done? Is there any incentive FSI again for self redevelopment?
Thank you, Prabhuji. Normally, we have learned the process of redevelopment. My colleagues has already explained that while redevelopment, there is an appointment of developers. What is the role of developer? Developer appoint an architect, take all the approvals, appoint contractor, compliance of RERA and other regulations, get the occupation and hand over the flats to the occupants as well as sell component. Is a subsidy, cross subsidy. Here the society itself is become a developer, as in by way of self-development. The profit which normally developer earns will go to society. Now entire procedure is more or less same, because society has to appoint PMC for controlling the development, architect for again approval and process, contractor to complete the development, RERA compliance, because sale component comes, so RERA also comes. More or less procedure, everything is same. Only the questions related to finance, how to raise a finance by the self society. Now there are banks, practically. I think Berekers was going to Mumbai Bank. Mumbai Bank is, the government is also thinking of appointing more banks to give a loan to the societies. Society can mortgage the land, or without mortgaging, create a fund, or society members can create a fund, give a loan to the society itself, and then society construct the building, get more area, that profit is converted to area, and member will get more area for their beneficials, and then sell some of the flats to recover the, or to repay the loans which they have taken. So principally, the profit which earns by the developer is to be taken over by the society. So society is more beneficial. They control the development. They control, then they provide the amenities. They decide what type of amenities everybody want to. They give more amenities. They give more. It is beneficial to the society because there is no profits and there is no income tax. I don't think, because if they are developing, if they are selling only, then there is income tax comes. They earn the profit. Here there is no question of profit. When there is no question of profit, they get more area by way of sales. So the procedure remains same, but the model will change. Entire model will change. The risk factor is only in finance. If project stuck, then only problem comes. Otherwise, this is much better solution, because here we have to depend the developers. What type of developers? Whether he is taking finance, own finance, outside finance. Here the society itself makes. So there is no risk, and it is more beneficial in terms of developers.
Thank you. I think तरुण भाई, in a nutshell you explained. मनोज भाई, सेल्फ रिडेवलपमेंट बोलने में अच्छा लगता है, सामने तो बहुत अच्छा बताया, मगर इम्प्लीमेंट करना बहुत मुश्किल है. Therefore, people are advocating and talking about development manager model. Can you explain what is this development manager all about, and how self redevelopment under a development manager can be done, and what is the difference between PMC and a development manager?
So here, I think to add to Tarun Bhai's statement, self-redevelopment, people are going in where the proposal is not attractive for developers, because the FSI is consumed more or the location is not attractive. These are the reasons for, society is preferring for self-redevelopment. Of course, there are incentives. Number one, collector, from class 2 to 1, if you convert the society, the premium is only 5%, otherwise it is 10%. There is no stamp duty. Society, if you are going to absorb the entire area, obviously there will not be any GST. So there can be self-redevelopment in 3 categories. One, entire whatever the area is available, existing members are absorbing. So that is one self-redevelopment. The second self-redevelopment can be whatever construction cost is required, that you hand over to contractor in a barter. So whatever flats, maybe 5 required or 10, remaining area society absorbs it. So there is no sale. Sale is just to the contractor. In exchange, he is constructing the building. The third can be, obviously you are selling the flats in the open market. Now, as far as the third category, first and two, you will not require a development manager. The third category, you will require a development manager, because if the product is huge, marketability in itself is a science. I mean, you cannot just say that, okay, I will be launching the project and people will be attracted and you will be able to sell it. So, lot of now, even Godrej is doing DM model. Even Knight Frank is doing a DM model. So, lot of corporates are also entering. If the inventory is too huge, say 100 flats are to be sold, you will require a person of that caliber. Now, development manager, what he does? Development manager, he markets the product, he collects the money, because he will be the responsible person for RERA. Co-applicant will be obviously society, but the RERA registration promoter will be DM guy, whosoever is taking up the project. PMC role will be for the feasibility and appointing a DM development manager. That also role will be there, and the construction, whatever monitoring of the construction is required. So DM basically will be required for arranging a finance, because we are doing one DM model with Hiranandani. Our client has entered into a DM with Hiranandani, and the corporate guarantee is given by Hiranandani. He is bringing in the finance. Of course, interest is being paid by the society. The cost also is on society. They pay 13%, 15% extra. But obviously, such kind of people are going to be your DM managers. The rates also will be enhanced. So, entire responsibility of construction, arranging finance, whatever the timelines are there, that also will be followed by the DM manager. And that is why, that is how the new role is evolving in redevelopment. Wherever, I mean, you don't want to give it to the developer, because this will definitely enhance some commercial benefits to the society if you go through this route.
Yeah, Hingu sir, if you can explain further, what is the fees? Because we are all chartered accountants. कल से एक ही बात कर रहे हैं हम लोग. फीस 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 किसमें कितना फीस होता है?
Fees of the architect, you mean?
So, in a redevelopment, self-redevelopment and redevelopment, both the places, there is a PMC required. So, how PMC charges fees, if you can just give me. And second, the development manager, whether he also absorbs the fees of the PMC.
Whenever a society appoints a PMC initially, the fees is always lump sum fees till the project report is made and till the developer is appointed. Once the construction work starts, the fees of the PMC ranges from around 10 rupees per square feet to 20 rupees per square feet. That's the standard model. However, these fees are absorbed by the incoming developer who comes and develops the society building. The fees of the PMC is never paid by the society. There is a contract where they write that whenever fees is payable, it will be paid by the incoming developer. As far as fees of the architect is concerned, generally it ranges from 3 to 5% of the construction area, or it ranges from 40 rupees to 75 rupees per square feet, depending upon the services our architect gives. 75 rupees is the standard per square feet fees of the architect, where it involves licensing, means getting plans approved from the BMC, designing and supervision of the project till occupation is received. And if only licensing part is involved, then it ranges to around 40 to 50 rupees. Yes.
Yeah, Manoj wants to say something.
I think there are two aspects. One is fees being quoted and what the fees are we receive. See, whatever the project cost is there, that burden is on the project.
Yeah, correct.
So, whether society pays, whether developer pays, whosoever, it is coming out of the project. Developer is not giving out of his pocket. He is calculating everything and then only he is quoting. So suppose all the fees are to be borne by the developer, he will quote accordingly.
So what
Yeah.
realizable fee.
No, so ideally, I would like to just extend what Samir said. See, number of members are also important. It cannot be a lump sum fee. If I am dealing with a society for 20 members, and if I am dealing with the members of 200, the number of meetings, man hours, all are going to change. So we normally quote according to the members. It can be ranging between 10,000 to 25,000. If I am quoting in Malabar Rail, maybe it will be 25,000 per member. And if I am quoting maybe Daisar or Mulund, it can be 10,000 rupees per member. So that is how the fees are quoted. Because sorry? Per member, if there are 20 members, 10,000 rupees means 2 lakh rupees fees will be charged.
Per flat,
So for
per
what
flat.
service? Giving feasibility report and the project report. Up to that stage, and then see, societies are unsure when they come to a PMC, they are unsure at what stage they will be reaching. And they also want to have multiple opinions as such. So one phase is project feasibility report and the project report, and the third is the tender process, and the fourth is execution process. So there are 3 stages in PMC, and accordingly the fees are
That's correct.
quoted. For the construction part, yes, what Samir told, it is about 2 to 3% of the construction cost for the rehab component. Sale PMC is not concerned.
per member exclusive of construction.
No. So construction phase will be 2 to 3% of the construction cost of the rehab component. Okay, and up to the developer is being selected, it can be ranging between 10 to 20,000 rupees, or it can be lump sum
Wait,
also.
I want Vilas Nagalkar to answer.
Sir, societies usually would like to pay very less. We have to understand, if you pay peanuts, you'll get monkeys.
And in case of development manager, the PMC is also appointed.
Yeah, when there is a development manager is different, PMC is different. He said PMC is an architect, engineer who monitors the construction. Development manager role is much bigger. He steps into the shoes of the promoter, developer, and does everything of the developer. So therefore, that is a professional work. This is a management work of bringing money, selling, marketing, everything. Sir Vilasji, we have heard so much about PMC qualification. Tell me how to select the PMC. क्योंकि बहुत सारे ऑफिस बेयरर्स है इधर सीए लोग हैं ना, आज सेशन में क्यों आए मालूम है? उन्होंने स्पेशली मुझे बोला है, सर हमको पीएमसी लेना चाहिए कि नहीं लेना चाहिए? अभी तो हमने बोल दिया, कल भी बोल दिया, आज भी बोल दिया. सर यू नीड टू अपॉइंट पीएमसी, इट्स कंपल्सरी. You need to take a professional. We explain in their own language. Professionals आया तो कितना फर्क पड़ता है? They are understood. Now they want to understand fees. That also we explain. Now how to select the PMC? Can any? अभी आपको 5 लोगों का एप्लीकेशन आ गया उधर. अभी मैं किसको चुनूं?
Just see his track record, his history, how much work he has completed. So that will give you a background to have at least person who has done some work. If there are, of course it will be injustice to freshers, PMC on one hand, definitely, but at the same time you have to take a justified call or pragmatic call, what is his track record. Second thing, duration of the PMC as such, just see the PMC is appointed, he does the tendering and everything. After tendering, how much really the PMC inputs are involved, or how much are they are related afterwards. That another is question mark is there. Just now we will not touch that in
Okay.
this seminar.
तरुण भाई, इन्होंने तो बोल दिया ट्रैक रिकॉर्ड देखो, ये देखो, वो देखो, और सोसाइटी वाले बोलते हैं क्या मालूम है? ट्रांसपेरेंसी के लिए टेंडर निकालो. Should a society come out with a tender and appoint L1 as the PMC, and what is the danger in that? Whether it is a requirement of the law to issue the tender for appointing PMC?
No, not necessary. It is for society to decide. Now we have seen there are in so many societies there are builders or contractors. So when society decide, they themselves decide. It gives the behavior of the builder. Builder is more reputable. Then they give him only work. PMC role will even come to prepare a feasibility report, whether what type of area is given to offer to the society. So PMC is there. Normally PMC is preferable of practicing, because when he practice, he understand. Yesterday whatever policy has been changed, by government, he can incorporate that policy. Whatever change in ready reckoner value, change in premium. So practicing people will do a very fast work. And he understand perfectly. He gives 99% a perfect report to the developer and to the society. Now, there are 2-3 models by which tender can be issued by way of private negotiation. Now, some of these societies, they want very fast work. They don't want to go for procedure. Then they invite by mouth publicity to the developers, and developers works out the offers and gives the offers. And PMC will play a role to decide a key between the developer and the society to regulate certain regulations, certain terms and conditions. That is one way. Second thing, it comes by way of issuing tenders. Prepare a tender and issue a tender. By tender procedure is very long because he has to give 1 month, at least 1 month time to take a tender.
पीएमसी को टेंडर मेरा ये बोलना है whether a tender is required is a proper system. I would say no. The regulation does not say. And secondly, कल मान लो एक उदाहरण के लिए मुझे बाईपास सर्जरी करना है, मुझे मालूम है 2 महीने के बाद बाईपास करना है, क्या मैं डॉक्टर के लिए टेंडर मंगाऊं? सी प्रोफेशनल्स आर कमिंग विद लॉट ऑफ एक्सपीरियंस, lot of exposure, and that exposure, as Vilas ji has rightly pointed out, you need to see who is good in what. If Tarun Bhai is good in housing society redevelopment, I should go to him only, because if I am going MADA redevelopment, I know that, for example, for MADA I know कीड़ा कौन है, मनोज दहीसरिया है, तो मुझे माड़ा का सोसाइटी तो मुझे मनोज दहीसरिया के पास जाना है, उनका लाइसेंसिंग, उनका वर्किंग, उनका डिपार्टमेंट. आई एम जस्ट गिविंग एन एग्जांपल. मुझे मालूम है हिंगू साहब समीर भाई तो पूरा एसआरए का कीड़ा है, तो मेरा एसआरए का रीडेवलपमेंट है, उधर मुझे जाना है तो शायद उनके पास जाना है. सो द एक्सपीरियंस मैटर्स. लोग रमेश प्रभु के पास सोसाइटी का लेके क्यों आता है? दे हैव दैट ब्रांड वैल्यू, दे नो दैट इफ दिस इज रिलेटेड टू सोसाइटी. कई बार मैं जाता हूँ सेमिनार में, अच्छा आप सोसाइटी प्रभु, so this way. So I'm just saying that ultimately you should never and ever tender, issue a publication, call an expression of interest and call for the price bidding when you are appointing a professional. That's all I need to say. And last, हिंगू सर आपके लिए, समीर भाई, हम लोग इधर क्यों जमा हुए? आपसे नॉलेज तो लेने के लिए जमा हो गए, ऊपर से हमको कमाना भी है. तो एज ए चार्टर्ड अकाउंटेंट हम लोग किस तरह से आपके साथ जुड़ सकते हैं, जुड़ के हमारा बिजनेस प्रोफेशन बढ़ा सकते हैं? व्हाट आर द प्रोफेशनल अपॉर्चुनिटी और इन व्हाट वे वी कैन हेल्प यू? सुयोग जी, एक्सेल शीट बनाने के लिए आप में हमारा मदद लेंगे या अकाउंटिंग करने के लिए मदद लेंगे? किसके लिए मदद लेंगे? इन व्हाट आई कैन जॉइन हैंड्स विद यू?
यस, रीडेवलपमेंट में. See, in SRA, the role of CAs are very important, because whenever we submit a proposal in SRA under 3311 or 3310, there is an NOC called Finance NOC. And Finance NOC may we need all the certification from CA, whether this developer is capable of redeveloping the project, whether he has sufficient funds, and how the funds will be generated for the project, say for 5 years. So we have to have a lot of input from the chartered accountant of the developer. So what I suggest ke if we conduct more seminars where under redevelopment or under say various authorities where CA's roles are important, and we can explain how CA has to issue a certificate, how CA has to certify certain documents, then it will be more beneficial. Interaction between architects and CA, as I think we have attended this seminar for the first time, where learned persons are involved in knowledge sharing. So more knowledge sharing is important, as far as role of CA is important in the redevelopment project.
सर मैं यही बताऊं, हमको इंजीनियर को लेना है टू वर्क आउट दी एस्टिमेटेड. आई विल जस्ट शेयर विद यू दिस इनसाइट्स एज ए part of the parliament committee when RERA was getting formed. Because when we said that a chartered accountant can be a better person to issue a certificate of withdrawal, and we are issuing for various authorities. They said, on what basis chartered accountant prepares? I said, naturally from the approved plan. Then who does the approved plan? Architect. Then who does estimate of construction? Engineer. So this way, if at all we are working out a feasibility report, project report, inputs from engineer, input from architect is equally important, because we don't understand about FSI, TDR, uska working. But they don't understand about the taxation. कितना GST लगेगा, कितना income tax लगेगा, and किस तरह का law compliances करना है, labor laws, this law, that law has to be complied. So that means these are the professionals thorough in their profession. We as a business consultant, a financial consultant, can join hands with them, a part of the team of the PMC. Wherever they want, they can take your service, and whether it is finding out the financial credibility of the developer, reading the FS balance sheet, giving the net worth certificate, all this can be worked out. With this, we are now concluding. There is enough opportunity for you as a charter. Some of the questions are left out. During lunch break we'll take. We have combined both the sessions with the permission of Manoj Bhai, and because both of them came together earlier. बोले मनोज भाई आपसे बोले हमको जल्दी छुट्टा कैसे करोगे? बोले एक ही ऑप्शन है, मैं दोनों सेशन कंबाइन करता हूँ. They agreed and we are very happy. So thank you very much.